You've got questions.
We got answers.
Coming right up.
Good morning, my name is Barry Horvath and this is Moving Forward TV, your local real estate and mortgage update.
And I am Lynn Gaston. Thanks for joining us today. In today's show, we're doing a mail show. No,
Mail?
not like that kind of a mail. Mail, email, all of the email. We get a lot of emailed questions about the various shows we do. People just chiming in, asking questions or giving comments or something. So we figured we'd share some of those with you, some of our most popular questions. Okay, on to our mail, the mail that we've been getting.
This is not about the mail review. Am I correct?
I knew he was going to go there.
I know. Since things are so busy now in our industry, I had to keep my day job. So my night job is over. I don't do that anymore. I've been telling you that. This is
Mr. Chippendale himself.
This is not about the mail review. So anyway.
No, this is our email list. Okay,
email.
First question. One of the questions we do get a lot, especially with all of the refinancing, everybody underwater, especially in the state of Florida,
yes.
Upside down, inverted equity, all those things. Everyone has been asking about the refinancing and the HARP loans. And we've been telling them if you have
That's my heart.
If you have a Fannie or Freddie, Fannie Mae or Freddie Mac loan, that's who the HARP programs is for. But the question is, are there any programs for upside down homeowners that are not Fannie Mae or Freddie Mac loans?
Funny you should ask that question. Very good question. Hopefully not from one of our male viewers. Just kidding.
It's gonna go there.
Sorry, I had to. Actually, last Friday, it was put on the table that the proposal from part of Obama's plan, for those of you who saw the debate, he didn't bring this up last night, but I know he wanted to, but it's being tabled now till after the election, we are told, but they're looking to put $5 billion, thank you, $5 billion into refinancing people who are not Freddie or Fannie-backed securities.
Right.
So if they're mortgage-backed by Fannie or Freddie, as we know today, we can go ahead and do a HARP loan for an upside-down, equity-inverted, submarine.
Underwater.
Yes, all those things. So they're looking into it, but currently today, as of this show, there's nothing available.
And Congress doesn't meet again, like you said, until after the election. So hopefully they will put a program together for those of you out there who are in that situation.
What about, do we have any more questions?
Yeah, we have lots of them. Okay, question number 2. What is the reason that people are getting turned down on these refinances? What are some of the top reasons that they aren't going through?
My personal opinion, and you can chime in any time, is, of course, equity.
Right.
There's lack of equity here in Tampa Bay. People have minimal equity. Of course, the HARP does help a lot of those people.
You know, and on that, I just have to say again, because a lot of people are very confused on this. People will say to me, well, I'm not Fannie Mae or Freddie Mac because my loan is Bank of America or my loan is Wells Fargo or something like that. That doesn't mean you're not Fannie or Freddie.
That's a good point.
Because Fannie and Freddie sell everything, or the banks are selling everything to Fannie and Freddie. So you probably are backed by one of those.
True. And then, of course, credit would be the other challenge that people have. You know, a lot of banks are different, so check with your bank and see, you know, the guidelines. Everybody has different rules. What score do you need? Well, some say 620, some say 640, some say...
Some are higher.
Some are 900, so stay away from those banks. But, you know, it's all different. So just because Fannie and Freddie set the guidelines, or even FHA, that doesn't mean the score qualifications are going to be the same at every single bank.
Right, and then the other reason they're getting turned down a lot is income.
Or lack of.
More importantly, lack of income. And a lot of times it doesn't have to do with lack of income, but it has to do with maybe excessive debts or something like that. So there's definitely some things, some tricks that we can do to help you out with that. Give us a call. It only takes a second for us to find out, 1, if you're Fannie or Freddie, 2, you know, what your income situation looks like, your debt situation looks like, or your credit, and we can guide you on the best ways for you to go on that. Question number 3. Do you prefer blondes, brunettes, or redheads?
What?
This is obviously a Barry question, not me.
Speaking of brunettes, I'm going to refrain from answering that. Speaking of brunettes, who did your hair?
My
Doesn't
hair.
Delenn's hair looks lovely.
Thank you
this
for
week.
noticing. Yes, Joanna from Style Makers in Trinity. She's in Longleaf. She is just wonderful.
Over on
I love
Starkey
Joanna.
Boulevard. She's done my hair too.
She
so.
is just wonderful. Yes, but thank you so much for noticing.
Oh.
But yeah, we're going to skip that blondes and brunettes and
Yeah,
stuff
I don't
like
wanna
that,
get in
redhead
trouble here 'cause,
questions.
yeah.
You
Let's go to,
you don't want to
we got
get in
any more
trouble.
questions on there?
Next question. What is the reason that purchases are falling apart? A lot of the purchases, we get some phone calls from realtors in a panic. Things are kind of falling apart at the last minute. Some of the main reasons that...
Number one I've seen is, of course, appraisals not coming in. Now, since the new laws are in place, that appraisals can no longer be just ordered directly from your buddy down the street who's an appraiser. Because we get homeowners that say, oh yeah, my friend, he's an appraiser. Can he do it? He'll bring it in. No, those days are over. You like that voice?
I think he's like on helium or something.
No, that's a different voice altogether. But
Got to hear that one day.
appraisals are now ordered through a third party. Of course, that's been going on for a while. And they don't always come in. Unfortunately, you may be ordering an appraisal from a third party. It's coming from some guy in Lakeland that's going over to Newport Richie, or some guy in, who knows where he is, comes in, and they're not always the best. Sometimes they're very good, so I'm not knocking the appraisal
and I got to say,
industry.
they're getting a little bit better. We've been all of us on the mortgage side, you on the real estate side, we've all been screaming about these appraisers that are coming from Riverview, to Newport Richie or whatever. We've all been screaming about that, and they've been listening. The AMCs have been listening, so they've been getting a little bit better with that. And the other thing that's really nice is finally being number 2 in the country for like most upside down market. They've stopped. At least most of the appraisers that I've seen, they've stopped putting down that we're in a declining market. Yay!
Oh, really?
Because we actually are starting to increase. You guys know that because we're having multiple offers on properties, which of course is making competition and making the property value stop declining. Well, the appraisers have taken notice, at least, like I said, the ones we're working with, and they've stopped making that negative adjustment for the declining properties. So things are starting to go up a little bit again. The other reason things fall apart halfway through the transaction that we found out, and this is a biggie, people who have had a bankruptcy or something like that, and I know one of the questions that we're getting into next is on credit and such. People who had a bankruptcy or something like that, and they said, oh, well, I had a house too, and I included that in with the bankruptcy.
And it was 4 years ago.
Yeah.
So I'm good, because guidelines say...
Right, 3 years and I'm good. It depends if your house was included in your bankruptcy. Keep in mind, the date goes from the date the deed transferred out of your name. Not necessarily the bankruptcy date. That is one key date, but the second key date when you've included your bankruptcy or your house in with your bankruptcy, the second key date you have to keep in mind is the date the deed transferred out of your name.
So just because they filed bankruptcy, they're not off of the hook.
Doesn't mean you're off the hook.
So do
on your
something
house.
with that property, because if you do want to get a home loan, everybody says, I don't care, I'm not going to get another home. That's not, you never know what the future is going to bring. Just because you filed bankruptcy, you're not off the hook. Do something with that property.
Right.
Okay, do we have any more questions?
We do. I was turned down for a loan at my bank. Can I try someplace else?
Ta-da! Yes.
And you should try someplace else.
Yes, and as I said earlier, all of your banks they may be Fannie Mae backed, Freddie Mac backed, or, Nick Nack, Patty Whack, give your dog a bone back. I don't know. Private investors. But every bank has their own overlays on programs that are put out there. So do shop around, and I would suggest, most people think, oh, I'm going to go to my big bank. This isn't like Walmart, where you're going to get the best deal by going to the big bank. You really ought to shop it, because there are different fees, different rates, and statistics show that people actually do better by going to a mortgage broker, because a mortgage broker can bring to the table many different lender options. So just
well, and they basically, because they deal with all the big banks most of the time, so they have those in their portfolio as well of places that they can go. So that's better.
Right.
Let them do the shopping for you, actually, because they can get the best deal.
Absolutely.
Like Barry said, all of the banks have their own overlays and such. So maybe Wells Fargo might say no to you. That doesn't mean that it's no. It just means that maybe there's something in the guidelines that they don't like about it, and a different bank or a different lender can do the loan. So definitely shop around. But do yourself a favor, when you are shopping around, find out if somebody says no, if somebody turns you down, your credit union or whoever, find out why they turn you down, so that when you do call the next person, you can say, this is why I was turned down. Don't try and hide it. Whatever you do, you need to be really upfront with your mortgage person. They're gonna find out, unfortunately. And if you're upfront with them, that gives them an opportunity to be able to work around it to see what the best way is to get your loan through for you.
You're so smart with that new hair.
It's the hair. Thank you, Joanna.
It is.
Okay, next question. I hear a lot about streamline refinancing. Is that something for everyone?
Ooh, there's always something.
Streamlines.
Streamline is a very, very hot topic, because
Yes, it
right
is.
now mortgage rates are the lowest they have been in history
Ever.
in my young lifetime. Okay.
And in my old lifetime.
Hey, stop it.
Ever.
Ever. Don't even
They've
go there.
never been. They're in the 3s. Some of them even dipping into the 2s right now. It's absolutely unheard of.
It is
So yeah,
crazy.
everybody everybody wants to, and
Everybody
everyone who
wants
can
to
should
yes.
refinance.
And a streamline is basically not necessarily going back to your existing bank, but just using the same type loan you have, whether it be an FHA streamline, VA,
Right.
or even there are some of your banks that will do a conventional streamline refinance where they keep it and just kind of redo it and lower your payment.
Basically, what the streamline means is that they're not ordering an appraisal. In most cases, anyway. Most of those are with the FHA, VA, the government type programs. And it's probably interesting to say too, even if, we were saying before, you're either Fannie, Freddie, FHA, VA, government program, or one of the others that we spoke about earlier that doesn't fit into those parameters. But if you're like right around, maybe not upside down, but you don't have any equity left.
Well, even on FHA does
You
allow
can go
on their
FHA.
streamline totally upside down properties. So if you're at a 5-6% rate, who knows? You could save a couple $100s a month, maybe more, just by streamline refining that property. So I think that's an excellent option.
Another really good thing to bring up with the refinancing that we're seeing a lot of people do is to cut your term down. If you're comfortable making your payment, you're at 5% or something like that, or close to 6% or whatever, but you're comfortable making your payment, so you said, you know what, I'm fine or whatever. Well, you know what, for like the same payment, or maybe just $10 more a month or something like that.
Maybe go from a 30-year to a 15.
Right. And that's really very, very helpful. We're seeing a lot of people do that as well.
So streamline is definitely something you want to look at.
Definitely want to consider. Okay, next question. What is wrong with Josh Freeman? Who is Josh Freeman?
Oh my gosh. Do you live on this planet? Really? Okay.
Apparently I watched too much Neil
For those of you who
Cavuto.
don't know Josh Freeman, he is the quarterback of the Tampa Bay Buccaneers. Clearly, this is my
I knew the
question.
name was familiar, actually.
Okay. All right. Josh Freeman's in a new system this year. Give him some time. He's a little erratic. They got a new head coach. Give the guy some time, okay?
They're doing good, right?
Yeah, we're 1-3, but that's not important now. All right. Is that really a question on the show? We get the craziest emails from people, but hang in there.
I think
Don't
they
give
know you're
up
a
on your
football
Bucks
fan.
yet. They'll be there. They're coming around. They're definitely a better product. What a great game this week.
And they're going to win the Stanley Cup. I'm kidding.
We do know that.
I know.
Actually, Josh Freeman is our new goalie. Okay, how's that?
All right, next question. This is a real question. I want to purchase a home.
These are all real questions.
I want to purchase a home. How much do I need?
Ooh, that's a loaded question.
This is a loaded question. That really depends.
Well, it depends on which program, depends on your credit, depends on the area you're actually buying in on.
Yeah.
USDA loan program was actually an agricultural loan. You need 0 down. Okay.
But the key with that,
You have to buy it in a USDA approved area. Now,
zip code related.
exactly. If you go on USDA.gov, you can actually see if an address will qualify. And you'll be surprised at some of the areas that are still under the USDA map.
Right.
They're zoned as agriculture. You know, some of your prominent neighborhoods actually can be USDA approved. But you need to check with your lender because USDA funds come and they go.
And they go. As fast as they come, they go,
it's
right.
limited availability on funds, but that's a great program. You could actually get in for zero down.
Right. Next, on zero down, obviously, VA, if you're a veteran,
VA.
there's definitely zero down payments there.
Again, you do have to qualify,
Right.
be a veteran, but VA is zero down, okay? And all these programs do allow seller to pay closing costs.
Right.
So VA
you
is
can get
currently
in with very little down.
Sure, VA is currently 4%, and there are non-allowables, so that's tricky. So get with your very talented, smart mortgage person to help you with all that.
Right.
And I'm sure they can educate you on that. And of course,
Then next we have our VA government programs. I'm sorry, FHA. FHA is 3.5% down.
Yep.
That's the minimum down payment on FHA,
Right.
which is pretty minimal out there right now. And again, sellers allowed to pay closing costs.
that one's up to 6%,
Right.
including prepaid taxes and insurance. So
So
again,
even people who are a little
3.5%
tight.
down, $100,000 house, I can get in for about $3,500.
Right.
That's actually pretty darn good with rates being so low and property values still being down there.
And then if your credit score is high enough, we actually also still have PMI is writing again. So 3% down programs on a conventional side.
Yes.
They are doing 97% financing,
So-
only for the higher credit scoring people, but they're definitely out there.
3% down. And you know, when you look at the MI rates, again, get with your very talented, educated, very smart, supernatural mortgage person to educate you on the difference
Like
of
us.
being putting the, hey, I wasn't talking about us. 2% more down and maybe really get that MI down because a 95 versus a 97, there
Right.
could be a significant
Big,
payment
big difference in
So-
payment.
And of course, there's the standard old conventional, which everybody thinks, oh, I need 20% down. But we do that. If you have 20% down, it's out there.
5% down, 10% down, right.
Yeah, they're all out there. So
And even for those difficult files in one way or another, there's even some private financing out there. So there's definitely some options for you. Great questions. Keep them coming. And you know, we did want to say, we're gonna do a contest, right?
absolutely. So
We're gonna do these question and answer, these mail shows at least one, like maybe once a month or once every other month,
Mail
something like
shows.
that.
Mail.
shows.
not female, okay? Yes, if your question gets asked on our show, we're going to send you a gift card just for your efforts. So keep the questions coming, and if you hear our question on the show, we're going to send you a gift
We'll
card
make
just
we'll
for
make sure
asking.
we send you a card. That's our show this week. Thanks so much for watching. I know it was a little on the long side, but great questions. Keep them coming. We really do appreciate those questions, and we're trying to get as many answered as we can for you.
Don't forget, like us on Facebook.
Yes. Twitter.
Follow us on Twitter.
Right.
And email us, text us,
Right.
call us.
All of our information is right down here. That's what we're here for. We are here to answer your questions. This whole show is about educating. The more we can educate all of you guys, the quicker this whole recovery thing goes. We also wanted to mention all of our partners over here. This is a wonderful source of information for us. They help us all the time get our stuff done, our loans closed, our people helped, and they can help you as well. We are today and every day.
Moving forward.
We'll see everybody next week. Bye-bye.